Hey, friends and family, how are you? It is the second week of October. It's time for another This Week in Real Estate. Yes, I love talking about numbers, but remember, week over week indicators or indication of numbers, it's a lead measure, right? We're trying to get a jump on the market instead of just the lag measures, which most of the stuff is what you see out there, right? So we're going to take a quick look at those numbers. Then we're going to spend a little bit of time on something that helps both sellers and buyers sort of work through inflation, right? Good policy, bad policy, politics. You like the monetary policy, you don't like it, interest rates, the Fed's overreaching, blah. Inflation is real, and our interest rates are getting manipulated by people that we can't control it, right? So here's what we get to do. We get to decide as consumers, both sellers and buyers in this market, how do we navigate forward? Because some of you still want to sell your house, because selling your house right now still gets you record high sales prices, right? But you're trying to say, hey, I want to make sure that I'm bringing a product to market that a buyer can say, hey, I can justify record high sales prices with an interest rate that's not kicking my teeth in. Because 7.5 on $1 million house, well, that feels bad, right? So we're going to talk about that second and what it looks like. So there's a resource and a tool out there for us. First, let's just turkey peek this week's numbers. So I'm sharing my spreadsheet with you. I'm just a quick numbers guy, right? October 2nd, active listings. Quick snapshot of the second week of October. Active listings are actually, look at this, we're actually up 20%, right? You can see it right here from 64 to 77. Then we go to new contracts, right? New contracts. These are pendings, in escrow, active under contract, those sort of things. Those are up 10% as well, week over week. So these are good indicators. More inventory coming on the market because we're still historic low, believe that if you will. And those homes that are coming on the market, if they're priced right, or as prices correct themselves downward, then what you're going to see is more contracts. Closings are up as well. Loving this, 32% increase in closings week over week. Holds are down. Love that. Days on market is up 1 day at 3%. Not a big deal. Sold price are down though. Look at that. Almost a 10% decrease in price, 9.5, right? So look at this. Our new contracts are up 10 and our pricing is down 10. I don't think that 10 has any correlation, but I think one has to do with the other. As the prices correct, because they have to balance off with the interest rates, right? As that happens, you're starting to see more properties go into escrow. Okay, so this is good. I mean, we're looking week over week changes. If we want to look back at the first week of October, I mean, you can look and see, yep, our active listings was down. Then of course I would guess that our contracts are down, our closings would be down, right? Days on market were actually down as well, which is kind of good. We're hovering right around that 30 days on market, 2 weeks in a row. If we go back one more, so we're still right around 30 days, right around 30 days, right around 34 days. So we're starting to get into some normalcy in our days on market. Praise God for that. Okay. Here's what I want to do. I want to spend a couple of minutes. Some of you have heard this. Maybe you do or don't know what it means or how it affects you. You like the way I got to get all situated because I get excited, right? There's a resource available to you. This is not a scam. This is not some other angle to work, right? This is understanding that when you're putting together a contract to purchase a home, there are multiple terms that you get to negotiate, right? In our industry, we always just think, well, I want maximum price, days on market, and how quick can we close, right? So that's the days on market thing. How quick can we close and how much money am I getting? And inspection contingencies and termites. That's typically what we talk about. But see, when the market is historically crazy on a high price, there's not a lot of skill set required, right? From a marketing perspective, I mean, we would still roll out the full complement of marketing tools, even though I knew 72 hours after I listed a property, I knew that it would be an escrow. But I did that because I wanted to build my online resume. I wanted people to say, wow, what you guys did, even when you didn't need to, was appreciated. Thank you, right? Now, the skill set, not just in negotiation, but the skill set in understanding the full complement of resources available to you is important in today's market. So we're going to talk about one really quick. We're going to talk about buying down the interest rate. So sellers, you're a little prickly when you hear stuff like that, right? Because you're after almost 2 years, it's literally been almost 2 solid years where you didn't have to do a repair. You didn't have to fix termites. You didn't have to budge on price. You didn't have to do anything. You literally just said for sale and it sold, and that was that. Those days are gone. The gravy train has pulled into the station, right? Now, you're going to hear me tell you that we still have record low inventory. Most cities between Glendora and Rancho, we're still sub 3 months. That's an indicator of a seller's market. I know buyers, you don't like to hear that, but it's true. Prices are correcting, they're coming down, but that's okay. You want that anyways, right? But because sellers are locked into some historically low rates, they might not want to become a buyer and double or triple their current interest rate. It's kind of crazy, right? So buyers, how do you get over that? Sellers, what do you do when somebody comes and says, I want you to buy down my interest rate? These are great questions. Now, honestly, buyers, it's a great way for you to move off of a 7 to a little bit closer to a 6, right? And sellers, it's a great way to give up some equity, right, to help the buyer overcome a higher price. It really is a win-win for both parties. That doesn't happen very often. Let me show you what I mean. We're going to put this one away from our friends over at Churchill Mortgage. We've got a little breakdown. This is happening on a property of ours right now. Our property address is 3405 Torrey Street in Riverside. This is being offered out. So you can see 30-year fixed side by side. The current list price is $606,000, 678, 606, 678. This is the list price right here. Now, we can say, hey, buyer, because this is what a lot of agents do. They'll say, hey, just lower the price because it'll help me save on my property taxes. That's an accurate statement, but now you need to know what's the cost of my property taxes versus the cost of savings if I got my mortgage lowered consistently for the next 30 years. So 7 to a 6.35, or 6.375. How did we get there? Well, we got there with this $10,000 credit. Okay. So when we're looking at this, we're saying, okay, now cash to close, it's about a $2,000 spread, right? So the buyer's going to have to come out of pocket a little $2,000 more, but look at the savings in the mortgage payment. That's a real $155 a month saving. Do that times 360 payments, right? That becomes real instead of you looking at your tax payment and saying, okay, how much are my property taxes going to be? I did the math for you. It's $55. Okay. So you're going to save an extra $100 per month by asking the seller to buy down your interest rate. Now, I don't know where your interest rate is going to start out at. And you don't say, hey, buy it down by 2 percentage points. You say, hey, I'd like you to donate 10,000, 15,000, whatever that number is, because that is actually a much more substantial savings to the seller than reducing your price 30 grand or 25 grand. Now, maybe it's a complement of both. Maybe we get a price reduction and you get the seller to buy down your interest rate. But now these are conversations that you can have. And sellers, it's a great, right? So you saw this PDF. I'm just going to pop it back up here. This PDF is in the supplement section of our listing. So now buyers, ask your listing agent or ask your buyer's agent, say, hey, are there any supplements? Is there any buy down options that the seller's offering? This is a great marketing resource for sellers that says, hey, we still want market value. We get it. We'll have to give up requests for repairs and we're going to have to go back to paying for termites. But let's also offer a service to the buyers. Let's say, hey, buyers, you've been getting kicked in the teeth pretty hard. Now you're getting kicked in the teeth even harder with the higher interest rate. Let's help you come off of that. And now let's talk about buying down that interest rate. So quick tip of the trade, look, it's a win-win for everybody. Sellers, you still get a little higher equity when you sell. Buyers, you get a lower interest rate. Very rarely in this industry do we get a win-win that makes sense for everybody. Let's start utilizing this. And as always, if you're looking to list a house, we'd love to have that opportunity to put some resources together for you, take a swing at the bat to earn your trust from the sale of your home. And if you're looking to purchase a home, we have a highly complimentary staff of buyer's agents that are chomping at the bit to get in the ring and go get you a good deal. So don't ever forget that with every piece of business earned here at Capital and Influence, you help us move the kingdom of God forward through Capital and Influence. We appreciate you. You're valued. You're loved. Have a great week.